Hello, YouTube. This weekend, we're going to talk about whether a pullback would be so bad. We're going to pick up where we left off for the last few weeks and talk about whether or not there are hollow candles, which we do have. We know there is a hollow candle and there is no lower low. But this weekend, we're going to focus on Fibonacci or math numbers because when we look here to the S&P, we are right on the 78% retracement. If we now look over here to QQQ, we know we are right here around that exact same number or that 78% retracement. So as the market is currently trying to decide, I want you to pay attention to two charts. Here we're looking at SPY, which has a hollow candle, and it's over last week's high by a couple of cents, under $1. When we look over here to QQQ, what we want to note is that it's actually a red week. So what is happening with the market? Well, the story continues here with RSP or equal weight S&P 500, where we've actually managed to get over this high we talked about, which would form that inverse head and shoulders. Equal weight S&P 500 is actually having a pretty good week. So another way to think about this is that would a pullback be so bad? We talked about this pattern before, where there is a five-step process for us to go from where we are right now to new all-time highs. And currently here in number 3 means that we go to new highs. And if we do get that pullback, that is what I want to talk about this weekend. What if we do go down? Is it healthy? Could it lead to new highs? And if we go down, if we don't go down, meaning now it's time to go up, is there a little bit of the seasonality chart here, which could actually play in? As we saw, we had that little bit of a pullback going into the end of the week. Well, this implies we're due for a straight move up. We also have something pretty big happening before the open on the 24th or Monday, which is going to be the NASDAQ 100 special rebalancing. It has only happened twice in its history. So we're going to talk about that as well. And as we look here to the heat map, what do we note? Well, that rebalancing seems like it's kind of already happening. Amazon, Tesla, NVIDIA, Meta, Google, all pretty red. Microsoft, Apple kind of hanging in there. So as we think about that and we look at the special rebalancing happening, that RSP kind of tells us that people have been buying almost everything else after earnings. We also want to pay attention to fear and greed, where we're kind of hitting an ascending triangle with a triple top in the low 80s. I think it's like 82, 84, 82. I want to see this break over 84 if we're going to get a fresh leg up. And similarly for the bears, if we get that move down, that would be the potential for that pattern here, which is the bearish one. If we fast forward, we got 30% of the S&P reporting this week. We got Microsoft, Alphabet, Snap, Visa coming in after the bell on Tuesday. And then we have Meta coming after the bell on Wednesday. There's a lot of big companies. It's 30%. It's a big number. And we could just note that Tuesday is going to be an important day. The short sellers are also coming in and adding some contracts back. We note that you're back here by adding back about 20% to 263 contracts. Do they know something we don't? We don't yet have any bearish clues on SPY. Still higher highs, still higher lows over the previous candle highs. But for some reason, they seem to know something we don't because they're adding back their short position. Before we go further, I'm going to ask you for a giant favor, please and thank you. If you could, please consider smashing that thumbs up and subscribing to the channel if you're enjoying the content. We put a lot of effort in, and we just want to make sure that you guys are getting a chance to get updates during the week if you are enjoying what you see. All right, picking it forward to the last thing before we try to dive in a little bit deeper, we have some economic data coming out this week, and there's a lot more than last week. These are the ones that I think will be important. Everyone here has three stars, which means the implied move or the potential volatility is fairly high. On Tuesday, we got consumer confidence coming out. That's going to be important. But as we look here to the earnings, we want to remember too that this is going to be important, meaning the economic data. But we also have these earnings coming out. So Monday, it's not that there's no earnings. We're already into the thick of earnings. I just think it really starts kicking off here on Tuesday after the bell when we have these other ones come out. So Tuesday, and then Tuesday going into Wednesday, we have the FOMC statement. That's going to be Jerome Powell, interest rate decision, press conference. And then after the bell on Tuesday, well, like almost right after, we got Microsoft and Alphabet. We know they're all part of the beat group where we're expecting beats for them. So let's see whether or not it's enough. Like Netflix and Google this week where they sold off. Sorry, Tesla and Netflix this week. Shifting to Thursday, we got a preliminary Q2 GDP print from the for America. Supposed to be coming in at 1.8. I think that would be received pretty well because it means that recession is not here quite yet. And then we got a doozy coming out on Friday, which is going to be after the Fed has their meeting. And that'll be quite interesting because As I look here, we've got core PCE at 0.2, which would be a tick down. We don't yet have this number here for the year over year number, which is the Fed's most important number. And then just finishing off here on that GDP number. So we look here, we got Q2 GDP coming out for 1.8. We go to the Fed's website as of July 19th. They thought Q2 GDP was at 2.4%. If it comes in above 2, I think we could do this one here where we're just like up, right? Because it kind of means that the Fed did it. They have a soft landing. And at least that would be the narrative. Is it going to fulfill all the way through to the third quarter and beyond, like meaning next year? I don't know. But if this number comes in, I think it would be perceived pretty well. So as important as the earnings are this week, I think that once we get to like Tuesday after the close into Wednesday, we start to really shift a little bit more to that economic data, GDP, PCE, and the short sellers appear like they're already kind of positioned for it. Okay, so let's make these two stories fairly simple. If we look here to the chart, we talked about the Fibonacci number, and I think what's important is to try to get a little bit of context in regards to what this means. So if we delete everything, and we just keep in mind that we have our all-time high right here, which is going to be going back to roughly 480 on January 2022, and our 348 low, all it means is that we went all the way down, and now we've retraced about 3/4, right? 3/4 or roughly 78%. Let me see if I can draw that 78% of the move. So we took about 10 steps back, and now we've taken about 7-8 steps forward. That's the easiest way for me to try to explain that. And if we think about the broader market, the percent decline was not as big as the NASDAQ, but the NASDAQ has also had an incredible move so far this year. So the percent decline is larger. If we have a look here, the percent decline is larger from that all-time high to low. But when we're retracing, meaning we're trying to retrace back to our highs, we've now retraced about 3/4 of the way, or again, taking 10 steps back and then about 8 steps forward, 8 steps forward. So we're right like exactly at the same area here. So what does this kind of mean? It means the market is moving in a lockstep together, right? It is locked up, it's stepping together. And that's kind of like a really important thing, because if we understand what's driving the market, we know what it should do next. So if we think about that math stuff, now let's think about another number. It's a big round number. What are these companies worth? Well, let's go here to no group, and let's just hover over top. Apple. We're looking at the number right here that's hovering at the bottom of the screen. Apple is worth 3.01 trillion. Okay. Microsoft is worth 2.5 trillion. Google is worth 1.5 trillion. Amazon is worth 1.33. Nvidia is worth 1.1. And then we got Tesla here. It's creeping up on a trillion again. It's at 824, sorry. And then Meta's here at 750. If you don't notice the pattern, for me, it's that they're really close to round numbers like 1.5, right? Like 2.5 or 3 for Apple, right? Or 1.33, right? Exactly 1 1/3 trillion for Amazon. So if everything appears like it's moving in lockstep, do we have to think hard this week? We're going to have so much data, and from Monday to Tuesday, right? From Monday to Tuesday to Wednesday to Thursday to Friday, who knows what's going to happen? So let's just try to understand what these two patterns would actually mean. And as the title of the video suggests, is a pullback really that big of a deal? So if we look at the note here, all it says is that we would crash land on the 50 monthly moving average. That's the first part right here. We poke below it, but don't quite lose it. That's the violation right here in the yellow box. This yellow box should actually be over here. So we violate it, we come back over, and then we form a higher high over the first candle high. That's the first one here, 4 or 5 month expansion, taking out the first high. Well, we have that. We got 1, 2, 3, 4, 5 back-to-back months here. So the question is whether or not we're going to stay green on the month. Over here, number 3 means that we actually go red. Over here for number 3, we stay green. And that's just the start. So I would note that in 2020, this was a new all-time high for us. It's not. It's a 52-week high, but I'm going to say close enough. Again, history does not repeat itself, but it often rhymes. Number 4 is consolidation. So if we're truly going into a pullback, that would imply that right now we're going to go into the end of July and consolidate into August, and then we form a new high going into the end of September. Okay, so that's like pretty easy. Then we go to new highs, new 52-week highs, and then we're kind of looking for new all-time highs. On the flip side here, that would mean like we're going to be going down, right? So that's kind of it. We would have to confirm this by falling back below. If we go to S&P, we look at a 1-month chart. Let's just remove everything. All this means is for us to get meaningful progress to the downside, we can't be over last month's high. We have to have a failed breakout. And the reason why we want to be mindful of this is because if we come not just down to 444, but we come all the way down here, which is what this implies, right? We go actually a little bit lower than the breakout candle. Well, for us, a little bit lower than the breakout candle means like 415, potentially as low as about 400. So if we're coming back down to test this area, we're forming a cup and a handle. Are you going to be looking to sell on support? Are you buying when you're extremely greedy? And when we come down to strong support, you're going to be looking to sell? If the answer is yes, like you probably need to understand where the warning is. Well, the warning is if we're not expanding on a monthly chart, that's below 444. But if we go back to that weekly chart, it's super simple. We mentioned it at the top of the video. It's a hollow candle, which just means we're closing higher than we open, which right now we have. I know the hollow candles are hard to see on the screen, but it gives us a really important data point. Are we making more progress from Monday to Friday than not? I showed you all the earnings, 30% of the market reports this week and a lot more next week. We have GDP, we got inflation numbers, we got Jerome, we got consumer confidence. Man, we got a lot of data, we got a lot of earnings, we got a lot of everything this week. But the story is simple when we think about whether or not we get these two things. A hollow candle just means if we're closing near the low of the week and everything ends up being a positive reaction by Friday, we'll have a hollow candle. And on the same note, we're pretty close to the low of the week. So if we're going to get that breakdown or the start of it, meaning we're going to start doing something like this, it's going to happen by us having a lower low and a full candle, meaning basically what QQQ did. So if QQQ is our leader and it's right here on that same Fibonacci number, it has the failed breakout. It's below last week's high. Is it below last month's high? No, it's not. So below last month's high would mean 372. So as long as QQQ just kind of like treads water or doesn't lose this low of the week at about 375-ish, I would say there's potential for us to just keep going up. On the same token, if we hit the uptrend, that's about 365. If we go back here to S&P now, if we hit our uptrend, our trend line next week, what is that? Well, it's 444. So we hover over here, it's 444. That's exactly that monthly high I just talked about. So if we come down to if we come here, we come back down, we test last month's high, and we bounce, well, that means that's support. We have our weekly uptrend. It's last month's high. It's also these previous weekly highs here. That's where I would expect to find buyers. So even if we get a full candle, it's just a warning. Confirmation would come when we stop actually going up, like we lose our uptrend. That only happens if we close below 440 next week. So that's really simple. And then as we're talking about breadth and depth, which is what everyone wants to see, if we go here to a hollow candle, man, it's been doing pretty good here, right? There's your pullback. There's the advancement. Nice green volume here. We know that's nice and big. It's continuing. And we have mostly hollow candles as we're going higher. So lots of green. And we're closing over last week's high. This looks a lot stronger than QQQ. So rotation out of tech into these other names is not bearish. That's why I'm saying, is a pullback really so bad? And we have to wait a few months to actually get the confirmation, because right now, the monthly chart, if we think about the note we have here on SPY, so here it says, hollow candle signal the expansion is continuing. Lower lows are a warning. Do we have either of those here on the S&P? Let's open the image and look really close, because I know it can be a little bit hard. Oh my God, we got 1, 2, 3, 4, 5 hollow ones. Are you really surprised we continue to expand? No. And we do have some lower lows that happened once. The expansion starts. We had one. It's basically a double bottom though. So low, higher low, double bottom, higher low, higher low. There's no warning. So for us to get a warning this month, well, we have to go all the way down to last month's low. We talked about that. It's a lot lower right now. So are you prepared to truly get a test at about 417? Or are you going to be scaredy pants, right? That's the question. And then on the flip side, are you going to actually believe it if we just go higher, higher, higher into July? We climb the wall of worry. We get over the fear and greed, over 84. And we get through Jerome. We get through inflation. We get through earnings. We get through all of that. And we just go up. I think people will be quite surprised. So there's my high-level take going into this week. I'm trying to focus on the technicals and the charts. But if you're interested, I laid out a video here from last week, and you can go now and watch. And if not, thank you so much for watching. I really appreciate your support, and I look forward to seeing you on the next video. Thank you again.